Okay, so today we're going to talk about how to really establish your overheads, because this is very, very important for a couple of reasons. One, if you're ever negotiating with the government, you will need to have this pricing breakdown. We're going to talk about that. But as I find, as I've gone through this now for the last, I don't know, almost 7 years, a lot of small businesses don't understand how and where to apply their cost. And the government is ruthless when it comes to this. They will get out the fine-tooth comb and they will go through your proposals if they need to. So overhead, let's start with that. It is an accounting term that refers to all ongoing business expenses. And you're going to find that it's often referred to overhead. I'm sorry, let me start over here. It's an accounting term that refers to all ongoing business expenses, not including or related to direct labor, direct materials, and direct equipment. We're going to talk about those two definitions here very quickly. Overhead is paid on an ongoing basis, regardless of whether or not you are doing any business. For example, overhead expenses are cost of doing business, just yourself, your salary, keeping the business open, keeping it running. So we're trying to distinguish where you put your pool of cost, okay? And let me see if I can get this to move forward here, okay? We're going to talk about it as indirect. You're going to hear this as either overheads, indirects, G&A. There's a lot of terms that come with this, but we're going to classify everything that you have, every expense that you have, in one of two categories. It's either going to be an indirect cost or a direct cost. And we're going to talk about that direct as soon as we get down here. So indirect costs are all expenses that cannot be directly contributed or accountable to a specific cost object, like a particular project, a facility, or a service. Let's say you are providing janitorial services, and the cost of labor for the janitor, the vacuum cleaner, the cleaning materials, those are all, you have to buy those, you have to use those when you are doing the actual service. But the person running the office, doing the time card, that's running the home office, paying the electricity, keeping the lights on, the heat, advertising costs, those are all called indirect costs. You have those costs just as a cost of doing business, okay? So it refers to anything that you need to do just to keep the doors open. They don't apply to any one particular project. Does that make sense to everybody? Or anybody raise your hand? Holler if you don't. It's called indirects, it's called overhead expenses. It's also known as G&A. And you have to remember that we have to keep those two pots separate. I'm going to move on here. Direct cost then, of course, is anything that is directly attributable to an object or a service. So an object is a product, a service. It could be a total building, the carpenters that are building something, the janitors that are providing the services, the machines that are actually making pencils. But it is a direct cost that would not be there if not for the project or the contract that you have, okay? So in construction, which sometimes can relate to other like services, it's materials, labor, equipment. In manufacturing, it's or other non-constructions, it's those costs directly attributed to providing that specific product. Janitors, cleaning supplies, your IT people, the computer, the keyboards, those types of things that you furnish or do to provide the services. Those are direct. If you didn't have that contract, you wouldn't have those costs, okay? So everything in your cost proposal, everything on your budget, everything in your tax reporting has to be identified in one of these two categories. It either has to be an indirect or it has to be a direct, okay? Therefore, you can account for these costs multiples of ways, and either one of them is fine. You can, for example, if you've ever had the opportunity to go and see a lawyer, the lawyer may charge you for every piece of paper, a cost of the paper to produce your report or your claim or your documentation. If they go to the Xerox machine and they plug in your case number or your account number and they charge that cost to you, then it's a direct cost. They wouldn't have that cost or that paper or that expense if it not for your case. Therefore, they cannot write off computer paper as an overhead cost. So if they never charge that paper to you as a direct cost, they can charge it as an indirect cost or an overhead cost. And that's how everything has to be attributed to. If you have a vehicle assigned to your company, is it charged to one specific project, say a construction project, or even a janitorial where they're driving around to project to project? How you assign that vehicle is either going to be a direct cost or it's going to be an indirect cost, meaning you charge it to the home office and its costs are spread throughout the project. But you can't do both. And the cost accounting standards, there's a very detailed CAS that has 19 standards and rules established by the government for determining these costs. Now, you have to be CAS qualified if you have multi-million-dollar contracts. The government doesn't require that for all other contracts, but with the exception that you have to have some sort of established process and you cannot change it. You can on occasion, but it's not supposed to be set up where you flip back and forth between the two types of cost accounting standards. So as you establish your cost, you either are saying, I'm going to put them in indirects and charge them there all the times, or I'm going to charge them as directs. And you cannot mix the two. You cannot flip those back and forth without some kind of detailed procedures. Does that make sense so far? I don't see everybody's face here, but let me see if I can get a better. So with that being said, oops, keep flipping between screens. Again, if you look at this visual, you either got all of these projects if you're in construction, or all of these service contracts, or all of these supply orders, and they are all in these bubbles saying this is the cost that I assign to just the direct material, the direct labor, the direct equipment, the other direct costs, incidentals. Those all can be charged as directs to that specific service. We call those objects. Object is a job, a service, a product. And everything that is not attributable to that, meaning cost of keeping the business open, advertising, accounting, payroll, all of those go into what your home office expenses are, or G&A, okay? Now, we call it in the government mostly, well, if you're on the construction side, you'll often also refer to it as HOOP, home office overhead expenses, okay? Now, the quickest way for the government, gosh darn it, the quickest way for the government to track this is basically, and Terry and Mary Jo, I'm sure can agree with this, is that this is how you report it on your income tax statement. You'll see that on your income tax statements, and this is just a rough sample because I am not an accountant, you have your revenue base, your materials and supplies, and your gross margin. Then there is a spot that talks about your expenses. All of those expenses that you list in there are supposed to be your cost of doing business, your expenses, your overheads. They are not, again, this is your G&A, this is your home office, this is your overhead. All of your direct costs, materials and supplies, or revenues up above or separate. You're going to identify all of those costs and you're going to kind of come up with a pool here, total expenses, okay? At the end of the day, you can take these expenses, which of course, and you can divide it by how much expenses you have. What we're looking for, I seem to be stuttering on my words today. How you report it to the IRS is how the government wants it, how you're saying to the government in any contract, this is how my cost accounting standards are set up, okay? So what you report to the IRS and what you report to the government are going to be the same process. And you can get this right off of your own, however you report it. And again, you can put it in either cost expense, but you can't do both, okay? So for example, if you have a project manager and you assign them as a direct cost, you cannot also report their salary as management in your G&A, okay? Now, how is this specific to, now let me go back just real quick. When you're looking to price your proposals, you're going to government, and we're going to talk about this a little bit later. The government's going to say, I want to see all your direct costs. What are you charging me? How much for the cleaning supplies? How much for the labor? I want to see how much you're paying your laborers, how many hours. Those are things we're going to negotiate. They cannot negotiate, nor should they be negotiating your home office. This is your cost of doing business. This is where you set up those costs, where you incur those costs. And the government has some leeway in determining what goes into that pool, but they cannot say, no, today I do not want you to charge that there. They have to recognize and respect that this is how your cost accounting system is set up. How do you charge the government for that? You're going to figure out what your percentage is. For every direct dollar I have to mark it up 30%. That pays the lights, that pays my salary. And how you get that number, of course, is looking at your revenue, dividing your expenses by your revenue and coming up with a percentage, okay? It will never be a set dollar. It will always be a percentage. We're going to talk about that a little bit. One of the things that you need to do when you're doing federal contracts, government contracts, is they're going to ask you for how you break all those costs down. Now, how you do it on your expenses may be set differently or called out or categorized. The titles you put on that may be different than what the government calls them. So what I would encourage right off the start, if you're just getting set up, you're just doing this, you plan to do a lot of government contracting, you need to look at how the government sets up indirect cost categories, because they also have rules about what you can and cannot use. Okay, this is that one exception. The government says, for example, you cannot charge bad debts. You cannot charge that to the government. The taxpayers are not going to pay your bad debts. You cannot buy alcohol. Again, these are all costs that the taxpayer is going to incur. And the cost accounting standards in the FAR have been set up to say, you cannot charge that to the government ever, okay? So what they want is a breakdown saying, what's in your home office overhead? Show me what's in your home office overhead so I can make sure that those are all allowable costs. And I'm not paying for trips to Vegas. I'm not paying for your bad debts. I'm not paying for certain things that the taxpayers should not have to pay for. That's why we encourage that if you're just getting started, you want to set up your cost accounting system and your reporting similar to the format that is in the FAR. That's if you're doing a lot of government contracting. If you don't do a lot of government contracting, you have a system already set up, that's fine, but you will have to report it back in this format. And sometimes that takes a lot of work to convert that back out. For example, one of the things that always seems to trip people up is that they have all of their travel cost. For example, your hotels and your dinners and things like that. If you include alcohol in those receipts, you got to go back then and break out all of the alcohol, because alcohol is not allowed. So you may want to set up your cost accounting system that says, we will always track our food cost or our entertainment costs this way. We will always track our alcohol expenses this way, so that we can make sure that it's separated out. You don't want to be in a position where you're in a large negotiation with the government and they're saying, well, we're going to disallow all of your food expenses or meals on travel because we can't tell what has alcohol and what's not. So that's a very kind of unique situation, but those are the types of things that they're looking at. And I'll touch briefly on those. We have this form. This is a form that in construction we've used. Again, I've been gone now 6 years, I think, and this could have been updated, but the FAR references have not. So we can get you this form and you can take a look at it. But as you can see, we broke down all the categories and I gave you a FAR reference as to where you can find this in the FAR. We're going to talk about some of those in a minute, how to get there. And they're going to say within each of those descriptions, what's allowed and what's not allowed. So you have to fill out your expense report here saying, here's all of my cost. Remember from this form, you'll see that there might only be a dozen requirements here. And yet this one is a lot more detailed, okay? And each of those cost factors or items has a FAR reference that's going to tell you, is it allowed, is it not allowed, or is it partially allowed, okay? And we have this form for you. It helps if you can fill this out if you're submitting a detailed price proposal. A detailed cost proposal. Now, if you're giving the government a price proposal, meaning one cost, an all-inclusive cost to provide the service, the government will not see this individual breakdown. They won't see how much of it is direct and how much of it is indirect. They've asked you for a price. That price includes directs, indirects, and profit. They will never ask for this detail. If, however, you're doing a sole source, the government does not have adequate competition. They can call for a price proposal, meaning one price, when they have adequate competition. Adequate competition in the government's eyes is where they can expect 3 or more. Now, they don't always get 3 or more, but they can say, I can look at these 3 proposals and I can determine that this is the right price or a competitive price because I have adequate competition. I have $1,000 here, I have $1,200 here, and I have $1,500 here. I can see that they're all competitive and I don't need to see the individual breakdowns. And then they can make their award based on that. That is a price proposal. Cost proposal is any kind of proposal you put together for a mod or a change order, or if you were in a sole source situation. For small businesses, that could be an 8A award. You have been given an 8A contract, a sole source, you don't have to compete with anybody. But the only way that the government can determine if your price is fair and reasonable is to ask for a cost proposal. So a price proposal is all inclusive and you don't have to give this breakdown. A sole source contract award or a modification with a prime contractor as a sub, you have to give cost detail. Cost detail then will have to break out directs and indirects. And they're going to go through it and say what's fair and reasonable, what's allowable and unallowable. So anytime you're putting together a cost proposal, meaning you're detailing your cost elements, you have to present this or should be presenting this. They could ask for it and they could say, tell me everything that is in your home office, your overhead, your G&A. If you're marking everything up 30%, I need to see what is in that 30% and make sure that I'm not paying for your bad debts or your alcohol or your illegal gambling, okay? Because the taxpayers, again, are not going to pay for that. That doesn't mean that you can't report it to the IRS. Matter of fact, you have to report it to the IRS. Government's just saying that because this is taxpayer dollars, you're not allowed to charge it to this contract. So they may go through and instead of a 30% markup for your G&A, you might be reduced down to a 27% markup because we're going to take out the expenses you're not allowed. Okay. In order for them to get that information, you have to fill out this form. What generally I asked for in the past is if you fill out this form, giving me your last 3 years, plus your current projections, I can go through then and determine that your business expenses are standard, they're consistent, and they're fair and reasonable. If for some reason you're paying 10% G&A the last year, all of a sudden you're projecting 30%, I'm going to ask for some kind of analysis, some kind of determination. How did you get to that? How did your home office expenses grow that substantially over a year? Why am I paying that? So giving them past history, what you reported basically to the IRS broken down in this format, and what you're projecting for the upcoming year. Does that make any sense? Is there any questions yet? The only bad thing about Zoom meetings is I can't see all your faces, so I can't tell if you have questions in your eyes or you're nodding or you're totally getting it. So I'm going to, unless someone hollers out, and please just holler out, I'll keep going. So we have this form. We can give you this form. This is what you would be doing, and you can see that I've tried to highlight in pinks the ones that would say these are unallowable, just to help you out. The ones in blue says, oh, they're allowable under certain conditions. And the ones, of course, in white are allowable. So what you would be doing is you'd be saying, here's how my last couple of years, 13, 14, 15, or you can do it the other way, 15, the oldest one on the outside, working back. And you would say, I spent $4,000 in bad debts. I had to write that off to the IRS, but I cannot charge the government, so therefore it's unallowable. And we move it to the unallowable. Of course, we're going to subtract it out. Down here, I can say under employee morale, welfare, health and welfare, I had $3,500 in expenses. 2,000 of them were not allowable because we took a retreat to Vegas and we did some serious drinking and gambling. So I cannot deduct that. Same thing with gains and losses. Again, bid and proposal costs. There might be some that are allowed and there are some that are not allowed. So you would have to go through each one of these prescriptions and figure out as you break down those costs. And again, I'm only pointing out here is that this is the format the government's going to want to see it at. And if you didn't report it that way, or you consolidated all of your cost more when you're reporting them to the IRS, you're going to have to break them all down. So if you're just getting yourself set up, Think about these categories. Think about how you might want to break down these costs and keep track of them. You can always roll them up when you're reporting to the IRS, but if you're going to do a lot of federal contracting, you have to break them back out, okay? Again, here's continues rental costs, relocation costs, legal proceedings, alcohol beverages. You can see that those are not allowed. You would have to subtract those out. At the end of the day, you're gonna again total these out. These numbers should match the 638,000 should match what's on your IRS statement. And I always had the philosophy that if you're going to lie to the IRS, I'm okay with you lying to me. So we kind of use that as, I used to use that as a double check. But of that $638,000, 21,000 was not allowable. You have to subtract that back out, which means your percentage is going to be a little bit different than what your normal G&A that you apply to all dollars or all clients. You're going to charge the government a little less of a percentage or a markup because certain things are not allowed. Okay. I feel like hopefully I'm not moving too fast. Hopefully you guys get that. You're going to have to break this down. This is one of the most critical elements I see for small businesses when I go and talk to them or we're meeting with them, because if you don't know, here's the thing, if you don't know what your overhead expenses are, you may not be pricing yourself accordingly. You may not be able to recover. You've got to be able to figure out, what does it cost me to do the job? What does it cost for overhead, G&A, to keep the lights on? And how much am I making in profit? And so many times, the reason I think this class is important and we want to reach out to people is so many times you wait till the end of the year to decide if you've made a profit or not. You can go into any contract at a loss. You can get in, sometimes we have contractors that bid government jobs just to get the experience, and they want to bid it at 0% profit, or they even want to bid it at a loss so that they can get the job, get the credit, and move forward. It's a business opportunity, a business expense. They write it off as. The problem is if you don't know that, if you don't make that decision consciously, you might be out of business at the end of the year when you can't pay the bills. So we really want you to understand, what are you making a profit? Where are your costs? What does it cost to do the job directs? What does it take to pay the janitor, the cleaning supplies, the carpenters, the materials, the equipment, the rental equipment? What does it take to do that job? And how much do I need to charge on top of that to keep the lights on? And how much profit do I get, which is my risk? We don't talk too much about profit here, but I am willing to get to it at the end if we do, because profit is all about risk. And that covers the profit, the losses when you run over, or you, and of course, if you run under, that's more profit for you after you subtract your direct costs. But if you don't know how you're putting your prices out there, either commercially setting your rates or setting up your contracts or even bidding to a prime contractor, you don't know, you can't even make a conscious decision about whether or not you want to bid it at a loss. You want to bid it as high risk, high profit, for assuming that you can get it accomplished. Profit and things like that also covers inflation, which is a terrible situation right now for a lot of contractors. Is that if you bid something firm fixed price, meaning I put my price out there first, my cost out there, my price out there, and I bid it, now 2 years, I'm into the project for 2 years, and the inflation and the labor rates are just outrageous. If it's firm fixed price, that's going to come right out of your profit. You don't understand these basic concepts of how to set up these costs in certain categories, you can't figure out where to make the educated decisions about your business. Okay, so this form is something that if you get into what cost analysis, cost proposals, you need to break down or be able to identify what your indirects are. Directs are easy. That's your labor, your material, your equipment, your other direct costs, say travel, things like that for the individual jobs, individual project, individual services. Okay, your overheads just are the more complicated system. Okay, now, if you go to, remember I gave you all these references right here, okay? And all these references, these citations are in the FAR. And as you go to the FAR, of course, and you can go to, just type in FAR 31 and it'll pop up. Acquisition.gov is where you'll find a copy of the FAR. And the FAR will have, you'll see there, all of these individual categories: cost of money, depreciation, economic planning costs. They don't cover everything. I got to tell you that when you start looking at utilities and things like that, it's a little hard to find them. Sometimes you got to make an educated guess, but all of them are supposed to fit into these categories. Here's lobbying and political activity cost. You know, what's allowed, what's not allowed, idle facilities, if you're talking about manufacturing, entertainment costs, employee morale, health, welfare, and food services, and dormitory costs and credits. Each one of these will then tell you what is allowable and what's not allowable. So you can see that under rental cost here, the following costs are allowable, meaning that you've got to read these and decide, yes, it is a rental cost. It will tell you that here's rental costs under sale and leaseback are only up to the amount the contractor will be allowed if the contractor retained. So there's conditions in here that say, when can you charge it, when can you not, what conditions must it meet, when is it not allowable. And the government will use this when they're evaluating you to look and say, okay, you've identified some rental costs, doesn't meet the conditions here. Now, one of the biggest ones that you get into in rental cost is market conditions, okay? I've seen a number of situations where the contractor might be paying or identifies just basically a terribly high rent cost. And we say, no, you can rent it someplace else. You can get a more reasonable cost. That's not the current market labor conditions. Okay, so you can say, that's the rent I choose to pay, and the government could come back and say, but that's not fair and reasonable to the taxpayer. And so you want to look at these conditions. Just because you call it a rental cost doesn't mean that it's going to be fully allowed. And I have seen the company I work for currently has been challenged. Our headquarters is in Napa, California. Those are terribly high rental rates, but we've been challenged as to why is your rental rate so high? Why is your office and your shop space so high? Why is the rent so high? And again, the government's looking at what is fair and reasonable. Okay, so this is the criteria the contracting officer would look at and say whether or not they think that your cost that you've identified is fair and reasonable. So if you're doing, again, federal contracting, you're going to want to go through and read these. Selling costs, this will tell you again what's allowable and what's not allowable. Okay, how do we see, notwithstanding any of the provisions here, seller and agents compensation fees, commissions, percentages, retainer, brokerage fees, and other than are not contingent upon award of the contract are allowable only when paid to bona fide employees. So again, conditions under what and how you can charge those costs. That doesn't mean that you don't report it on your, that doesn't mean that you can't incur it as a business cost. It just means you can't charge the government for it, okay? But each one of these categories is called out in the FAR as to what's allowable and what's not allowable. And you need to go through these. On the ones that are in blue, you're going to want to go through and say, okay, which ones are allowable under these conditions, which ones are not allowable under those conditions. The problem with this is that, again, you can see that there is two categories. One, my budget or what I incurred and what wasn't allowed. How do you track that? How do you go back and recreate that? You may want to ponder that when you're setting up your cost accounting system to make sure that you can track those. So again, we have this form. You can go through the FAR, look at all the categories on how you would have to detail your cost and how you would have to, what conditions have to be met to determine if you can charge those to the government. Okay. Trade, business, technical, and professional activity costs. Some are allowable, some are not allowable. Okay. And under which conditions? Training and education costs, you know, what are allowable and what's not allowable. Travel costs. Now, this one's always interesting. And again, the government says, we hear you, you got travel costs. Here's all the things that are allowable. However, the government says that the taxpayer should only pay what is fair and reasonable. How do they determine what's fair and reasonable? They have a joint travel regulation, what we call the joint travel regulation, GTR, and it says that these are allowable rates for these areas. So the government says, I hear you. I see that you can have flights, and I see that you've got hotels, and I see that you've got meals. How do I determine that those are fair and reasonable? Well, I don't have a standard book that tells me all of the meals, all of the restaurants in the area. So what I'm going to do is the government's going to go to the federal travel regulations, the joint travel regulations, and they're going to look at what is the standard for that area. What is the standard hotel room cost in each area? So again, the government's saying you can charge me travel costs, but they have to be fair and reasonable. Now, you may not include this. Don't forget that this is something that they may say also may be used for your, again, these are cost accounting standards, and these are the criteria that are what's allowed. They don't say that this has to be overhead or direct. So if you have travel for your employees, say your services, you offer IT services, you're traveling to Chicago, I want to charge you direct because I would not be traveling to Chicago for this client if not for this project. So I'm going to charge all of my travel expenses, all my employees' travel expenses directly to the job. The government's going to say, I need to see that breakdown. If you didn't give them a price, you had to give them a cost proposal, which breaks down the cost. They may go to the JTR and say, your travel expenses are only authorized and will be reimbursed based on what is reasonable. You stay at the Ritz, that's fine, but we're only going to pay you for the Hilton or the, Holiday Inn. So you have to know what those rates are. Does that make sense?
Hey, Mona, we do have a question in the chat here. The first question that we have is would you also look at the 2 CFR Part 200 as well as the FAR to see what costs are allowable? I mean, wouldn't you also look at the 2 CFR Part 200 as well as the FAR to see what costs are allowable?
Well, I am going to say I never have, but yes, the FAR is, in the case of the federal contracts, the FAR and the DFARs is going to be the ultimate requirement. If it says to refer to that, then yes, you would do that. That depends on the contract officer. I think right now they're all overworked. Terry may chime in, Mary Jo may chime in but generally, if we can fit it within the FAR category, that's where we end it, okay? Now, if you can find something that supports your case, then you want to throw that out there. And when we talk about proposal preparation, we will touch briefly on where to put those notes, where to help them understand where you got those costs and where there's allowed.
So in the second question I've got here from Maricela, I just started my business, starting revenue in July. I don't have all these numbers yet. Would I still be able to create a proper HOH? I have saved expenses, but I don't have my expenses broken down.
I'm going to assume that by just starting, and I do apologize, for some reason when I'm sharing my screen, I don't get to see the comments. So thank you, James, for calling those out to me. If you're just starting out and you haven't paid your first, haven't submitted your first tax report for your company, then yes, you need to set it up. I'm sorry. What was the question again? I think I went off on it.
I think the question is that that they really haven't started revenue. I mean, I guess they just started revenue in July. They don't really have all of the numbers that are required yet, and they're wondering if they can create an HOH. And she saved her expenses, but really hasn't broken them down yet. Oh,
well, I'm going to assume if you haven't done any, I guess I have a question. Do you have any business yet, or are you just in the setup mode?
I do have some business. I just don't have, I'm not like expanded as far out yet. I see the examples that you have created. But there's a lot of numbers on there that I'm like, I don't know what that is. I just started this July, so I don't have everything broken down. I have certain things that I've been paying in cash, but the taxes that I reported were taxes that I reported for the time period that I wasn't working. So I started my business about a year ago, but I just created revenue in July. So the period that I did my taxes were for that period of time that I wasn't working. So when I reported my taxes, I had no revenue, I had no work, I had nothing to report, nothing at all. So my next set of taxes would be for next year.
Okay.
That's when I could actually be like, okay, this is what I paid for, and this is the expenses and so forth.
Okay. Now, don't forget that what we're talking about is expenses. So every expense that you have has to be categorized into one of two areas, directs or indirects. Okay. So regardless of how if you're even in the process of setting up, you just need to know which pot you're putting these expenses into. You're either direct, meaning that I had to pay somebody to go out and do something, or I have my office expenses. And you may not have any revenue at this point. You may have up here when you're filling out your tax return, you may have zero revenue. I had zero revenue because I'm just setting up my business, right?
Okay.
And so for tax purposes, you're going to say, you know, how you deduct this, how you write it off as a loss. I had no revenue. So therefore you know, I'm not paying taxes on my revenue, and I had all these business expenses to write off. You're probably getting a credit back. When you move to this form, you're going to say, what were my actual expenses for again, my home office, and I'm going to divide it by my revenue. So my number is going to be really high. Right now, I have no business. I have no revenue coming in, or I have very limited revenue coming in. So my overheads, of course, are very high. They're also going to ask you to project. So as you start to build on this, they're going to say, okay, I see you had a startup year, you had zero revenue, but you had all these expenses. You're going to project next year. That's what what you're doing is you're budgeting for the upcoming year. I'm saying, this is what I've incurred, and these will grow. We get that during a business. When you're growing, you're just starting out, these expenses are going to be very little, you know, or you may not have all these categories. You fill it out to the best of your ability. They're going to say, what's your budget now? How much revenue do you think you're going to be making this year? And you're going to divide that. So they're going to look at it and say, they're going to say to you, what do you expect to do in revenue? If this is the only job you're going to get, then yeah, basically you're going to have almost 100% markup for your G&A, you know, because you got nothing else to charge it to. Okay. But as your revenue comes in, of course, you're spreading that cost percentage wise, dollar for dollar. So they just want to see that. And you may have to put a note on there, you know, hey, I had no business in, matter of fact, this one's kind of old now. My sample's really old. 2019, I just started my business. I had no revenue. I had, you know, limited expenses for my home office. As my business grew, I gained more G&A, more home office expenses, but now I have a revenue base to divide that. How do I share that? So the only thing I would recommend is that as you're starting out, it's okay to say, I didn't have any revenue. It's okay to say my overhead expenses are growing. They're either growing or diminishing, of course, because the more business you get, can you spread those costs? Overhead's usually it reaches a point where it's pretty stagnant. You know what I mean? You've got the same account. You've got, no matter how much business you have to have a certain amount of payroll people, accounting people, you know, CEOs, you know, they become pretty stagnant, and they look for any fluctuation. As you're growing or starting your business, that could change. You might not have been paying rent. You might have been doing it out of your home and getting, you know, not having to pay rent. As your business grows, you might have to go rent an office. So the government's looking for those trends, and they may ask you to explain it. Why did you have, you know, $100,000 in G&A and you jumped to $600,000 next year? Well, I expanded my business. They're going to want to see that. But your main goal in setting this up is just understanding the categories that you have to report to the government, what's allowable, what's not. Again, it trips people up. Like, even, I hate to use alcohol and food as the one that says, nope, you absolutely cannot bid any alcohol. Well, how do you keep track of those records separately? How do I set that up so I know how to deduct it? The same thing with employee morale and welfare. There's certain times you can charge the Christmas party off, and there's certain times that you can't. So you want to understand that as you're setting it up, as the expenses come in, you want to figure out which ones fall into which category and which ones do I have to track so that I can subtract them or count them so that they don't discredit the whole thing. Okay. Does that help?
Yeah, that helps.
And as new businesses, you're going to be all over the place. You know, this might be your first year. You don't even have any actual revenue. And they might ask you what's reasonable. You know, they're not going to pay one government contract. If it's the first government contract, they're not going to pay 100% of your home office. They're going to say that's just not reasonable. You know, I mean, I shouldn't bear the whole cost of it because you have opportunity. You have the option to get other work. And so therefore they may just try to negotiate with you as what's fair and reasonable. But what they want is the information to look at. Okay. And so the goal for me today is to help you get set up to be able to answer those questions. Okay, does that make sense?
Yeah.
Anybody else got questions, something that that's causing? So part 31, I would, if you're going to be doing business with the government, and want to make sure that you do not get in a situation where they're chopping money out of your proposal just because you aren't ready for it, read part 31, look at each of these categories, know which ones you fit into, which ones you don't. And if you do fit into it, what can I charge and what can't I charge? Okay. I can guarantee on interest and other financial costs, they're going to want to see, you know, what's, again, fair market rate on your interest in your cost of doing business, those types of things. So read this, make sure that you understand what rental costs are not, which selling costs, you know, what can I do on advertising, those types of things. Okay. So read part 31, get yourself set up to know when expenses come in, where do you put them? How do my cost accounting system, my record keeping, my books that I keep, how do I keep them into that they're defined? Okay, anybody with accounting, any person with accounting knowledge or background is going to know that you can only put it into one category. You can't double dip. Okay, and it has to go into one of these. Set your books up to be able to allow you to see this information. Okay. And James, thank you. Somebody, Terry, anybody that sees a comment for some reason, again, when I'm sharing my screen, I can't see the comments. I'm sure there's a way to figure that out.
Yeah, and I've basically instructed everybody in the chat to raise their hand or to input their questions in the chat, and we can get to them at a stopping point. So just make sure to get a couple of stopping points in there, and we will chime in.
Thanks. I just figured out how to call up chat. So see, I can be taught something new. Don't hold your breath on that, but I think I can teach myself something new every once in a while. So home office G&A markup on top of my direct cost is computed by dividing your expenses by the revenue. Now, the rule I want you to remember when you're talking about G&A and markups is how you divide it is how you apply it. Now, in business, you may say, in manufacturing, they may say, I'm only looking, I don't count my revenue, I count my machine hours. So I charge every time the machine turns on and produces something, I charge by that. So some people figure out, they report by labor hours, they report by material, they report by something other than total revenue. And that's okay. How you set up your business is fine. So your markup, you can use one of several bases, but how you divide it is how you apply it. So for example, if you are dividing your G&A, your expenses by your total revenue for the year, you'll come up with a percentage. That means every time you then put out a proposal, cost proposal, remember it's detailed, I charge that percentage to the total revenue. Some people say, I only set up my G&A based on my labor hours because I'm labor driven. I don't care about my revenue, I care about my labor hours. So they divide their G&A expenses by their labor cost, and therefore G&A is only applied to their labor cost. So you don't get to switch back and forth. You don't get to say I have a higher G&A if I divide it by my labor, which is only part of it, and then I'm going to apply it to all of revenue. So how you divide it is how you apply it. Okay, does that make sense? Because that seems to confuse some people and they figure out what their percentage is. Okay, so that's the rule I want you to always remember, is how you divide it is how you apply it. If you divide it by total revenue, you apply it to total revenue. If you divide it by material or labor, you only apply the markup to the labor and material. Okay. And now I got to remember to click over here. Okay. So again, this is again the visual. Now, I don't know, and I don't really have a way. Again, if we were meeting in a classroom, I'd be able to get a show of hands. If you have construction projects, or if you have services that have another separate office to manage projects. I don't know how to explain that correctly, but say in, let's just use construction for now. I have a construction project. Here's a $1.1 million project out there. And I have to set up a job trailer out there. I have to set up a project manager to oversee everything. So in a sense, and by classification, those are direct costs. I wouldn't have that trailer. I wouldn't have that manager if it was not for that project. However, I cannot figure out how to charge their hours to every single change order. Like how many doors I'm going to buy, how much time does the trailer have to do with a change order for providing new doors. So we have what we call indirect directs, and that really is confusing. So I don't want to stumble too hard on it here. I want you to be aware of it and to ask us for some support on that, because again, those are direct costs, but I don't know how to report them with every change order or every process that I'm going through. And if you have construction or IT services or even janitorial services, they may be saying, oh, I want you to add a room for janitorial service. And we know that that takes 2 hours of labor and $100 in material and, you know, 3 hours of an equipment rental for a shampooer. But I also have a manager that's overseeing it. I have a truck that's running around, but I can't charge that truck to that one office. I got to charge it to the whole project. So again, it's a direct cost, but it's an indirect direct. And that is very confusing to some people when you put the proposals together. And I just want to touch on it briefly here so that you can, and in the material there's some better explanation on it, but you will have in your direct costs items or expenses that appear to be by classification indirects. I can't put my project manager on that one room, or I cannot apply my safety manager to one change order to put in new windows. I don't know how to get that expense. I don't know how to put those hours out there. And so there's another way, again, coming up with a percentage, applying a very similar process to the indirects or the G&A to those direct costs. And again, we can collect those costs. They're still direct. I have to have them as directs. They're not ever reported as G&A, but I can collect those costs in the same manner and come up with a percentage and apply those costs within my direct costs. So again, you might have a janitorial supervisor. They want to add a room. You don't know how much of that supervisor's time is dedicated just to that room. So you want to come up with a percentage to spread those costs across the board. Okay. So that is very confusing for anybody new starting out as to how to bill those direct or how to get those in your cost proposals. Okay. So just be aware of it. We, in construction, they're called field office overhead. It smells like an indirect, it looks like an indirect, but it really is a direct cost. But within that direct cost, we're going to treat it as an indirect. So that's a very confusing factor. You could have that, I suppose, on janitorial services or any place that you have a project has like a supervisor or a project site or a vehicle that takes all the people out to the site. It could be any kind of services. If it would not, again, if it cost did not exist, had it not been for that project, it is it's a direct cost. Okay. So here's just some examples. Again, you've got a job trailer, you might have a forklift, you might have a safety manager. It could be, and here's some better examples of how you could have multiples. Do I have project managers? Are they field office or are they home office? Project managers could also be for services, supervisors, superintendents, supervisors. Do I treat them as a direct cost? Do I charge their time for every change order, for every proposal, or do I treat them as a fee, which is really that percentage we're talking about? But here's just some examples of how you can take any cost element and determine that it's either direct or indirect. If it's direct, I can also say, though, that it is an indirect direct because it applies to multiple things. And that is a very confusing thing but keep this chart, think about it when you're doing your directs, because now we're not in the indirects, now we're in directs. And when you're putting together your proposals, we've separated out now my G&A, I've got a percentage, I know what my home office expenses are. Now I have my directs, but within my directs, can I come up with labor, equipment, and materials? Or do I have these expenses that are kind of spread, meaning I have a superintendent, I have a supervisor, I have one vehicle that brings all the employees out. How do I charge those? And there is another way to do that within your cost expenses and how to report that. It's still costed for accounting purposes as a direct cost, but when you're preparing a proposal, you're saying, I have this direct cost, but I don't know how to apply the hours. I don't know how many hours a safety manager is going to actually be associated with a change order, okay, or a modification, okay? So again, here's a table for you. We'll send this out. It can apply to a lot of different things. So again, I keep reiterating it, but I want you to think about my indirects, meaning my G&A, my directs. I wouldn't have these expenses had it not been for this project. If I didn't have this project, these expenses would not exist. Make sure that your initial system is set up to categorize the cost expenses into one of those two pools, okay? On your indirects, you want to make sure that they fit into the category that the government's going to allow and review and determine fair and reasonable. When you get to your directs, you're going to have, say, direct material, labor, and equipment. But I also have these expenses that are they kind of look like and they kind of smell like indirects. And there's possibilities where you could do it either way. And the PTAC, you've got really 3 ex-contracting officers here that can help you in getting through that and how to apply that and how to do that. So if you ever have a question about putting together a cost proposal, then contact the PTAC, okay? Again, there's an analysis form we can give you that says, here's all of my, and I'm sorry, that's such poor quality. Here's all of my categories that I cannot, they're not direct labor, and they are direct, but they're not specific. I can't tell you how many hours a quality control manager applies to a change to add 3 windows, okay? So we would help you set this form, okay? And again, you're going to total them all up. You're going to divide it. How you divide it is how you apply it, okay? So there's just some samples on how to fill it out, okay? And again, you want to remember how you divide it is how you apply it. I'm not going to spend a whole lot of time here because I don't think I have very many construction firms in the class today. So I don't want to waste everybody's time, but there's a lot of other types of services that could meet this category, you know, janitorial, IT, sometimes even, you know, like guard services, things like that, training. You might have some of these categories that are direct, but they don't really, you don't know how to price them. You want to call us and we'll help you through it, okay? So things to consider. How you set up your method for cost accounting is a business decision. The only thing that I have for you to take away is don't let it be a lazy one. Don't think that you can just set up 4 categories for indirects, your G&A, group it all in there. It's very easy. And then when it comes time to do a very detailed cost proposal, the government says break it all out. Those are labor hours you cannot get back in your, you know, as your overhead. As you're putting together a price proposal, you don't get to, actually the government doesn't allow you to put proposal preparation costs. Those are not allowable. That's cost of doing business. But all of those hours where you might have to spend going through all of your tax receipts, all of the forms, setting up a cost accounting system. So don't let it be a lazy one. Understand how you're going to set up your business. If you're going to do federal contracting, think about and be aware of how they categorize those services, because they want to say certain ones are allowable and certain ones aren't. So you don't get to just say to the government, these are my overhead expenses, you have to live with them. The government says, no, we only live with them if they meet this criteria. Okay. Understand the, what is GES? Where did I say GES someplace? Or did I probably have a typo?
It's past 9.
Mark?
Past 9. I'm up.
Oh, sorry, it's right there on the form. Government estimates. Okay. I don't know where the GES government estimates. So understand the project, the client, the contract terms before you make any decisions. Most, we call them IGEs, independent government estimates. Government estimates, GES. I don't know why I use that term because mostly it's IGEs, independent government estimates. Government estimates nonetheless. Your client's estimate. When the government puts together proposals, they do not recognize subcontracting methods. That's one of the things that, you know, when the government says, I've got my own estimate, I'm comparing it to what you've told me it is, because now I'm in a sole source situation on especially on a change order. I think it should cost $100,000. You've got $200,000, and we're going to sit down and go through it and figure out why. Okay, those are something that we want to also encourage you as you're putting your proposals together. Government estimates they just think about straight across the board, one person to do it. They might even have an estimating manual means or something like that. They don't take into consideration any subcontracting methods or how many other procurement buys you have to do and how those. You also have to remember that every subcontract, every lower tier subcontractor, every lower tier vendor has markups that they're allowed to have. Okay. So let's say you're buying janitorial supplies and you have to buy quite a bit of the material. You don't actually produce cleaning solutions. You have to buy those. Well, that person selling that is also entitled to their markups and stuff. Government doesn't always recognize that you have to have markup on top of their markup. So sometimes the government doesn't take into consideration the layers and then the expenses that go into doing that. So just understand that, make sure that you are aware of it. Most government estimates are prepared based on percentages and often an overall percentage, meaning it should be, markups should be 20%, okay? They don't break it down because they
9 o'clock.
They don't break it down because they don't understand it. They go with estimating manuals. So if they say 20% markup is standard and you have a 30% markup, they're going to question it as to why. So again, just understand that the government doesn't put together cost proposals, whether it be their own, for evaluation based on how you may price it. You just need to be aware of that. Government, and this is for construction, but government estimates don't include a schedule. So sometimes they don't put in a schedule, so they just kind of guess on how much time it takes. How does that affect you? It affects how much labor, how much overtime, how much I have to do to accomplish their schedule. It could be delivery of supplies. The government's got a schedule and then it says I need it in 30 days. Well, you might have to expedite it. So just think about things to consider as you're tracking your cost or reporting your expenses. Make sure that those expedited shipping costs are an expense that is a direct cost. Okay. We'll skip the default clause right now for recovery of costs. We didn't talk about that. It is in my rights and remedies. Ignore if you're not in construction. This class is geared for construction, and I apologize. There's different ways, and that's what the next couple ones are talking to: the normal method, the alternate method, the daily rate, percentage rate. Those are all construction related to field office overhead, which we touched on very briefly, but we didn't get into any details because I don't think we have enough construction attendees to warrant that. Historically, more costs have been received with the percentage rates. That's a construction one again, and I apologize, let's not get into that because it'll confuse you. And how you set up your cost accounting system reflects the ability of the company. You got to remember that if the government starts to question your cost and you don't have the records to support it, they're going to disallow it. Okay. And you do not want to be in a situation where your costs are you can't even recover your cost to do the job. Okay. Exceptions. Again, this is a construction slide, so I don't want to spend too much time on that because again, it applies rules of the road. Okay. These are takeaways. You must have an established system that will withstand an audit. Now, if you get successful enough, and we all hope that you do, there could be a situation where anything over $750,000 has to be able to withstand an audit, meaning DCA may come in. Defense Contracting Audit Accounting. Oh, gosh, what does DCA stand for? Defense Cost Accounting. Terry, DCA.
Audit agency.
It's the audit agency. See, we just call them DCA. We talk government lingo. if a contracting officer who has very limited experience in auditing or record keeping or accounting, if they're not able to justify or look at the paper and be able to figure out if it's fair and reasonable, or if it's even legal, meaning that your cost accounting system is set up, it's proper, it meets all the criteria, they're going to call in DCAA. DCAA will come in and say, open up your books. Show it to me. Show me your cost accounting system. Show me your records. Show me these exact receipts. So you have to be able to say, I've kept track of all of this. I've accounted for it. My cost accounting system is in accordance with standard operating procedures. And you have to be able to withstand an audit. The smaller your business, and I hear you all, the smaller your business, the more likely you are just to have one folder that has all your receipts in it. Okay. And you're going to want to make sure that you keep adequate records, because this is the one thing you don't want to do. You don't want to have them disallow anything. And the government's great at saying, you can't substantiate it. You can't charge me. You can't get it. And you're going to have to fight for it. We don't want that to happen. So make sure that you have a cost accounting system set up and that all of your records are maintained. No. Question 750,000. Remember, 750,000 must have certification. I believe that number has been raised. I believe it is 1.5 for construction. Terry, do you happen to know off the top of your head what the services is, or non-construction?
So you're talking about the certificate of cost and price analysis?
Yes.
Yeah, it was raised a few years ago. $1 some million, but I don't know about the difference between the contracts.
I will see if I can do a quick search so that you know. Those are by action. It's not total for your business, but any action, it used to be 750. I think it's been raised. Actually, I think it's been raised to 2 million for construction, and I don't know what it is for services, but I will get that to you. Anything over those dollar thresholds, they basically, it's a truth in negotiations, sir. They're saying that you have accurate, that this is to the best of your knowledge. These are not, they're looking for fraud. They're looking for false statements. They're looking for things that they that might be able to criminally get you in trouble with. So you have to sign a cert over what we call a certificate of current cost and pricing data, which means my cost accounting system is set up. All these costs are accurate. All of these can be accounted for, and I can substantiate all of these costs. They're looking for basically a signature that says I have it's truthful to the best of my knowledge, and that I have no evidence of fraud. Okay, and I will get you those numbers here really quickly. Who's and indirect rates are always going to be, remember, we talked about G&A, we talked about home office, we call it who, we talked about G&A, indirects, they're always going to be distributed as a percentage. That is a cost of doing business, and it's distributed to all dollars or all revenue or all hours to all clients. I spread all of those costs equally. The government, although the government disallows certain costs, the principle is that all of your overhead expenses are charged equally to all of your contracts, dollars, and products. You're not unequally charging the government for more expenses than would be normally recovered someplace else. Unallowable costs cannot be included, okay? And that will skew your number. That's where I'm saying is that you might have a set up 12% G&A, you know that every year it's the same, or 1 year it's 11, one it's 12, one goes back to 9. Again, how are your expenses divided by your revenue? Assuming you're dividing by revenue, they will fluctuate. If you don't have as much business in the year, of course, that number is going to change. If you have a little more expenses that year, your numbers are going to change. But the government, because they don't allow certain expenses in your overhead, that number might be different. So if you charge your clients 12% across the board, that's what you were paying last year. The government say, once you take out the things that are unallowed, you might only be at 10.5. You just have to remember that, be able to substantiate it, be able to support your other costs, okay? FOO is a direct, but it is also, we talked about this, FOO is a direct, it's an indirect, and must be recovered under the contract terms, meaning that your supervisors, your vehicles that you use to transport your people to the site, general equipment used on services, perhaps it's a server for your IT services. Those things, again, you have to know whether they're direct or indirect. If it's not a definable feature of work, it's most likely food. And this is what, I'm sorry, this is a construction one, but again, it might apply to some services, meaning if it's not identified to one thing, a individual room for janitorial, an individual trouble desk for IT, an individual floor of construction. If you can't attach it to, again, a definable feature of work within the direct cost, then it might be food. And those have a little bit different accounting system, okay? If you're construction, about 99% of your Division I costs, for those that do understand construction, are always going to be food. I have to have a superintendent, I have to have quality control, I have to have a schedule. So anything that would be considered Division I or general services on a services contract, like where you have to have supervision or a schedule or reports or attend meetings, those are going to be costs that are food, what we call food, field office overhead expenses. They are direct, but they are indirect. And I know that that is probably the most confusing. Every party, we just talked about this a little bit, every party, prime and subcontractors are entitled to markups. So this might be a situation where the government estimate just kind of went down the board and said, this is what we pay for it. And you may say, but I had to go to this vendor and they're entitled to markup, and I had to go to this subcontractor and he had markup. And I, as a cost of doing business, am entitled to markup on all of them. So don't forget that everyone is entitled to markups. If the government determines that, say, 8% profit is reasonable for this job, technically every party, whether they be first tier, second tier, whatever, is entitled to profit, and they're entitled to profit. Then you're entitled to profit on top profit, which often is confusing, but don't forget, everybody is entitled to markups. Okay. The number one thing I would always say to you in this case is documentation is critical. You want to make sure you have an established procedure. You want to make sure you have all your expenses. You want to make sure that you have a cost accounting system that tracks all of those without exception. Okay. Food will kind of hop over. Make sure the team understands the pool assignments. This is another thing. As your company grows, you may start to lose sight of what your plan was. So you might have somebody that's in your accounting system that actually is recording costs separately or different. So make sure that you have an established procedure. Make sure that is well communicated, because you don't want to be in an audit situation and find out you've been reporting it one way, someone has been charging it another way, and then you have a conflict. Okay, those are things you do not want to be involved. And of course, most importantly, how you divide it is how you apply it. Documentation is most critical. But if you ever confused about how do I apply my home office overhead to every cost, every dollar, is it by revenue? Is it by labor? Is it by equipment hours? What is it being divided by? And that's how I will apply it. Okay. Questions? I mean, we've got a half hour here, so feel free to ask me anything you want to know, or Terry or Mary Jo, we're here to help you. Any questions you might have about overheads and how to do price proposals or cost proposals, I'm sorry. Because on a cost proposal, again, understand the difference between price, one number, which includes all markups, and cost proposals. And the one slide that I am missing, I just realized I was missing, is that the DFARS has a requirement. Of course, it's defense federal acquisition on any proposal, modification proposal. It says very clearly, each proposal has to detail, and I will get you that clause and I'll post it here, direct materials, direct labor, direct equipment, other direct costs, ODCs, and then markups. And you have to be able to substantiate your markups. When we say markups, then that means my G&A, how much am I marking it up for my overheads, and profit, because they're going to want to negotiate profit separately. Profit is based on risk. And there is another form that is in DFARS that you can set up to analyze how much profit you are entitled to. And the government will use that. They'll say, just because you think you're entitled to 12% profit because you like that is not what we're going to say. So there are actually formulas in the DFARS on how to set up profit matrix and how to do that. So in any proposal, they want to see direct cost. They want to see G&A, and you have to be able to support it, or who, home office, G&A, overheads, indirects, and then profit. And there's a worksheet that the government will use on how much they think profit should, how that should be set. But your G&A, they want to see that all the unallowable costs are been excluded. Another thing that they will look for in your indirects is duplicate cost. We get more questions. I actually can say I also have generated questions of like vehicles. I have pickup trucks, and that could be multiple services use pickup trucks. And you have vehicles in your home office overhead, and you have vehicles in your direct, and they want to make sure that the two are not the same. So you've got to be able to keep track of those expenses by actual VIN numbers, by equipment. Yes, I charge my vehicles that drive for the home office. The CEO has one. I've got some other things that are home office. They never go away. But I also have vehicles that are used for each project. If I don't have that project, that vehicle gets returned, or it isn't rented, or it is an expense. So the government likes to look for duplicate costs. They're looking for where you have made an error in everything that we've talked about today. Duplicate costs, unsubstantiated costs, undocumented costs, okay? And that's why your cost accounting system is so important. But if you don't understand your overheads, you don't even understand sometimes where you are making some losses until you get to the end of the year. Okay. Questions? Holler out. Terry, Mary Jo, and I are here to anybody. Okay. Well, if you give me about 30 seconds here, I'm going to find out for you the new thresholds for cost accounting systems. As soon as I can log on to my other computer here. Oh, give me 30 seconds. Question, anybody, comments?
And thanks everybody for showing up this morning. I know it can be a difficult topic for some, trying to figure out the exact cost, direct pricing and indirect pricing. But I'd really encourage you guys to reach out to Mary Jo, Terry, Mona, or I with regard to any questions, and we can help walk you through that. And that is part of what PTAC does. I do see a question in chat here from Mark. He says he doesn't have a microphone, but he can only type a question. Should he break out his cost to chase gov business rather than chasing commercial business?
Well, the key is that you need to have one system. And that's what the government will look for. That's what is required by law, is that you have a cost accounting system. The only thing I would suggest is that if you are going to do federal costs or federal contracts, that they require certain information. So you might want to go ahead and set up your cost accounting system to track both, or to be ready to do both. Okay. They will not let you have two books. They will not let you keep two separate systems. So, for example, you may have under your home office or your G&A meals. And again, I keep going back to the alcohol one. The government will say, I need to know what your alcohol expenses are because those are not allowed. So you might want to go ahead and set up your cost accounting system that when your expenses come in, that you put, $45 on the food and the $35 on beverage. Boy, that sounds awful. I meant the $5 for the single drink that you had separately so that you can account for that. I don't know if that makes sense, but if you're going to do it, the government's going to require it, but you're only allowed one cost accounting system. Anything else would be questionable, and you might get some auditors knocking at your door why you have two cost accounting systems. So I would suggest that you be aware of what the government's going to look for, and that you set up your cost accounting system to be able to separate those all out. Okay. Does that make sense?
Yeah, he thanked you in the chat. There was another question from Katrina. She says, if her company is typically hired on as a subcontractor to do the same CAS requirements for proposals apply, or will it be up to the GC to determine what they want to see? It passes down. Matter of fact, there are flow down clauses. Another thing we can always talk about is the cost accounting system, the proposal preparation, and the cost allowable and unallowable costs for part 31 flow down. So you and the proposal requirements
have to be substantiated for every tier. Now they will start to back off on some of it based on, let's say, commercial COTS, what we call COTS. So if you have a vendor that is supplying cleaning solution, they don't need to see the breakdown because we can go we can Google it and find out that cleaning solution this is the cost. So that what they're looking for is competition or price reasonableness. So how low the tiers go down and how much detail is only subject to the availability of the services for determining fair and reasonable. The flow down clauses apply. If they can't figure it out, if they can't figure out fair and reasonable, then they may have to supply the details. I don't know if that answered it correctly, but yes, it flows down, but it lessens the more you flow down to the point of where a certain vendor or a certain subcontractor has a commercially available price or a COTS, then they don't have to show the breakdown. I might have muddled that up. I hope that. And it's up to the GC to make, the government likes to say that the general contractor is responsible for the proposal. So I would get in the habit of making sure that you submit what the government wants to see. And there is some subtleties about whether or not the government says that you certified it or double checked it, but that is not, you cannot be required to do an audit on their books. But yes, they flow down.
Okay, and Katrina has indicated there, said thank you for that. Jennifer Tucker asked the question, I was told that you have to file with the DCAA, not just for over 750,000, but if your contract has a certain clause in it. Are these two different issues?
I'm going to say yes, because one, DCAA is, private contractors cannot call on DCAA. DCAA is an audit agency that only is employed at the request of a contracting officer, to the best of my knowledge. To the best of my knowledge, I'm saying 99% sure is that any contractor cannot just call up DCAA and says, come audit my books. I want to make sure I'm proper. They don't take calls from contractors. They only take calls from the contracting officers. So I think that they are two separate things here. The cert cost and pricing cert is related to basically the Truth in Negotiations Act. And again, it was raised from 750 to 2 million. If your proposal or estimate or proposal, and that's a cost, remember, we distinguish between price. You don't have to show any breakdown, and it is just based on fair market competition, or cost, meaning that it's a sole source where I do need to detail all my price. Anything over $2 million now has to have what they call a certificate of current cost and pricing data, which says, to the best of my knowledge, my price and my proposals and the information you see here is accurate. They're looking for that truth in negotiations. They're looking for the fraud statements that you are double dipping, or that you've got records that didn't exist, or you're charging things that are never going to be charged. That's a pretty wide stretch. It doesn't happen very often, but that's the difference between the two. Does that make sense? Did I answer that correctly?
And that applies to all types of contracts, service contracts, construction, whatever. $2 million for everything.
Yes, I did see that it is $2 million for everything, which is really nice, because it did go up with inflation. I mean, and again, it's a simple 2-sentence certification. It just says, to the best of my knowledge, it's accurate, which means your cost accounting system needs to be able to support the cost. What they're looking for is of course large multi-million-dollar, billion-dollar companies that are doing billion-dollar contracts that have, you know, basically they're looking for fraud. They're looking for people that have hidden cost. So if you set up your cost accounting system correctly, you track your costs, make sure you keep your receipts, make sure you have a good records, you will be fine. The main reason I bring this subject up, well, one, because I want you to always be able to substantiate your costs. But two, you need to, as small businesses, you need to know what your costs are. You need to know what your cost of doing business is. You need to know whether you're marking it up, whether you're doing things at a profit or a loss. You can always make those decisions. You can always say, I'm going to take zero profit the first year. I'm going to have very competitive prices. I'm going to keep it down. But you have to know what your home office expenses are, so that you know that you're not going in the hole, basically giving services to the government for free, or any business for that matter. Okay.
And it does look like Jennifer, thank you for that comment. So Mark had another question here. The most recent NAVFAC forecast of construction related work lists dozens of future contracts and only list less than 750,000 or more than 750,000 or higher, less than 750,000 or higher ranges, 3 million to 5 million. So is that reference to less than 750,000 an outdated range limit?
No, the range of construction projects and how they list them in this case is not, it doesn't have anything to do with the cost and pricing certificate of cost and pricing cert. It's more just a they're distinguishing primarily just on the scope of the value of the contracts, because it in construction and NAVFAC specifically, it will start to apply for bonding. So if they're listing forecasting construction by dollar values, it has nothing to do with the cost and pricing cert. Okay.
Awesome.
And remember, if you, again, a couple things I want you to keep in track of is directs and indirects in your cost accounting system. But I want you to understand price proposals, which is one number that includes everything, and cost proposals, which are for change orders or sole source situations. And the government asks for cost proposals when they have to determine fair and reasonable. They can't, they only have your cost proposal in front of them, and they have nothing to compare it to. So in that case, the FAR and the DFARs and the flow down for the government contracting officers is very clear. When you do not have adequate price competition, meaning prices out there, I can compare 3 prices or more together and figure out if that's a reasonable cost. Cost analysis, they only have your proposal. So they're going to go through it with a fine-tooth comb. And they're going to look at every line item and say, are you paying that employee too much? Is that too many hours for that specific service? Is your G&A too high? Is your profit too high? Why do you have vehicles in both? So they're doing a very detailed cost analysis. And you want to be able to present your cost and your proposal in a manner that begs less questions. Okay. We always want you to go in with the best information to be able to substantiate it. So when you're putting your cost proposal together, put notes over to the side. You know, this is my current wages. This is a market conditions, what I had to pay my people to get them. Here's my current rental receipt for the pickup truck that I'm charging you. You know, here's the information, because they have to answer all those questions in there before they can determine your proposal is fair and reasonable. They can't just say, oh, today I'm an expert in this. I've been doing this for 20 years. Therefore, I think it's reasonable. They have to say that, yes, that's the current market condition. Yes, that's the going labor rate. Yes, that's a reason. I've checked their overheads. They don't have duplicate costs. So know the difference between a price proposal and a cost proposal. And the more information you can give them, the more detailed your records, the more, better equipped you are to provide them the data in a manner that determines it's fair and reasonable. Attach those rental receipts, attach your current labor, salaries is what the going market is. I currently work for a large construction company, and we take the names off it. We actually have presented a 5-year labor rate category by PMs, because the market conditions for PMs has just, it's a employees market out there right now. They can get anything they want, but we are actually tracked cost for 5 years to show what the current market conditions are, what it takes to keep and retain a project manager. This is what the market is driving it for. And that helps the government in determining that, yeah, that's fair and reasonable. Just the fact that they see a salary of $125,000 a year, they go, oh my God, that's a terrible price. Well, here's my records that show that that's my last 3 employees. When I hired them, that's what the salaries were. We take out, of course, all the names and pertinent data that would be privileged, but we help them understand why the rates are what they are. And that comes from good record keeping. It comes from having your cost accounting system set up so that you can track those costs. Okay. And again, I just want to emphasize that as I work with small businesses, if you don't even understand your G&A, you're already behind the power curve, because you don't know how to make your business successful. And if you are going to do government contracting, think about understanding what they say is allowable and unallowable, and be able to gather that data easily so that you don't have to spend a whole lot of time going through all of your records to subtract out that data. Okay. Anyone else? I will certainly let you go early if nobody else has any questions. So you can get back to doing what you really want to do, is get your business going and make money. If you have any questions, I will send this presentation to James. He will send it out to the attendees, so you have this for your records. And as always, if you have any questions, if it triggers anything up coming down the road, don't hesitate to reach out. James will assign it to one of us and we'll get you that information. We're more than happy to help you with your proposals. We're more than happy to help you break down your costs and show you how to set it up correctly. Okay.
And thank you, Mona, for the great presentation today. Thank you, everybody, for showing up, and we will get all that information out to you. So have a great rest of your day. And if you have any questions, please feel free to reach out to any of us. Earlier, I put my info in the chat. As Mona said earlier, I can connect you to any one of our contract counselors. And we're looking forward to helping you in the future.
Have a great Thanksgiving, everyone.
Thank you.
Bye-bye.
Bye.